Welcome to this week's edition of the 6-5. I'm Patrick Moorhead with Moor Insights and Strategy, and I am joined by my famous co-host, Daniel Newman with Futurum Research. Daniel, how are you, my friend?
Everything but famous, but it's good to be here.
It is good to be here. Temperature's going down in Austin, spending a lot more time outside. It's not 100. It is awesome. Do you guys have any snow yet in Chi-Town?
Hey, that's pretty funny, Pat. I like that. That's humorous. We have had snow here in the past at this time, but it's really only the middle of October. November is when it really gets awful here. And Pat, just so you know, I think every time we kick off the show talking about the weather, we admit to our audience that we have aged. There's just a point in your life where that's like the only thing we have anymore. It's like you see someone's like, how's the weather? But we have a lot of other really cool stuff to talk about. So don't remind me of my awful climate up here in Siberia. Let's talk.
Well, you know, Daniel, we kind of moved to the weather after we can't talk about our travels anymore, but it's only a danger sign when we start talking about our health. That's when you know we're getting old. But let's jump into that. And just a reminder, the 6-5 are 6 handpicked topics for 5 minutes each. Many times Daniel and I do go over because we just can't help ourselves. If you are an investor, don't take anything we say to the bank. In fact, this show is for information and entertainment purpose only. We will talk about publicly traded companies. So, Daniel, let's jump right in. Apple had its big announcement. Investors are hoping for a super cycle. The iPhone 12 came out, a new HomePod Mini came out as well, and let's chat about that. My initial thoughts on it were that Apple probably did enough to keep its base happy. It is, for the record, last with 5G. And that was the big thing here, is adding 5G, Qualcomm chips, which I'm sure they're very happy about. And that was the biggest news to me. I mean, the HomePod Mini, HomePod was a complete bust, way too expensive, high quality, but in a sea of $99 speakers, the whole value proposition of $399 and $499 didn't do well. And Apple keeps throwing curveballs and striking out in the smart home market. I don't consider Apple TV, which is a good product, part of that. But when it comes to things like speakers and cameras and even their ecosystem, they haven't done pretty well. At $99, it is competitive. It is 2 years after everybody else came out with their $99 speakers. And now we have Google and even Amazon at much lower prices. So Apple isn't going to win in any price games. But then again, Apple typically trades at or sells their products at a premium, and folks are more than welcome to jump on to that. One of the notable exceptions from the announcement yesterday was Spotify, just the world's most popular online streaming music service. But as we have seen, this is how Apple repays its partners for crossing the line. And as you know, Apple has a lot of antitrust scrutiny, in part on the way that it treats its partners. To end this out, Daniel, I think the one thing that stood out for me was yet again big claims on the processor front without a speck of substantiation. The biggest one here, and I'll be publishing an article on that probably today, was that Apple claimed that it was challenging notebooks on its performance. I do appreciate the weasel word, challenging, gives you a lot of room, but Apple didn't talk about anything about what notebooks it tested, what benchmarks they used, what workloads, what resolutions, all the important stuff that all the major chip providers provide, so they have a little bit of extra credibility and they don't get sued. And I think this is going to be a risky move for Apple as they move into their own homegrown MacBooks, where if they're going to make just blanket statements like this with no substantiation, I think they're playing with fire here. We've seen many class action lawsuits against processor makers, particularly when it came to notebook performance claims. And I think Apple is setting themselves up for some incredible risk here.
That's a great assessment. I wish I could do that whole, thing really well, because I would have tried to do it. So there I did it really poorly. But so 5G kind of landed with a thud. Like, you really thought after being so late that the 5G launch would be big and exciting. I've watched the stock. It didn't really move much. I mean, it's been an interesting few trading days. And again, not an investment show, but I always kind of watch to see how the market reacts, and didn't really react.
Well, Daniel and I heard on CNBC that the past 3 Apple launches, their stock went up every day. And this was one of the first times in a long time that the stock actually went down.
Yeah. I mean, it looked to me, I did a picture side-by-side comparison with an iPhone 4 and a 5, and there was a lot of similarities to it. New fortified glass that's supposed to be a little harder to break. I mean, this is really incrementalism at its best, and 5G shouldn't have been incremental. But the problem is we're a year behind. I mean, I was laughing. 5G, what is it like? They said 5G has arrived, or 5G is finally here, or 5G is now here. Some statement. I'm like, 5G's been here like over a year. I've been using it every day on multiple devices from multiple OEMs on multiple networks around the country. Now, Verizon had a nice launch. I thought that was good for Verizon. I don't know what they paid, but that was solid. But yeah, I was underwhelmed, and the prices are up. And Pat, let's talk about the BS climate claims too. I was really sort of perturbed about the whole, we're going to take your cable and headphones away because we want to do the earth well. Now, granted, I might be able to give some credence to the headphones thing. A lot of people do have wireless now, or they want to sell more, but Apple makes a fortune selling these connectors, the mag, and now the typical lightning cable for charging. Nobody has one of these things. You get a new one with every phone because you need like 50 of them. You need 50 of them for 2 reasons. One is they get lost, they get misplaced, and they fray after like 3 months of legit use. So this is a profit thing. I mean, does it help the earth? Yeah, if nobody actually drives to the store and buys a cable, then maybe it does, but I don't know, Pat. That claim to me was absurd. I get where it's coming from. I get that the company needs to compete with Amazon, who's made massive forays into climate, Microsoft, and because as you mentioned, Pat, with the notebooks, Surface is innovating, breaking things, changing things, developing new products that are exciting, everything from the Surface Duo and the Neo to their laptops. And now, and they've already, by the way, done the Qualcomm ARM chip. They did this long. So everything's just someone else's thing. And that's not Apple's DNA. So look, I'm being a little critical, Pat, but Apple isn't Apple anymore. If Apple's just doing what everyone else is doing a year later, at least it used to be a year later and legitimately, markedly better. Now it's like a year later and it's like, now I need to do my best sleeping impression. I could have slept through that thing. Having said that, I'll probably use a 5G iPhone and at least as one of my devices, and Apple knows that, and that's part of why they really don't even have to try sometimes.
It is, and Daniel, thank you. Gosh, I thought I had exhausted all the topics, and you just proved that there was a lot. I did throw up a little bit in my mouth when they talked about the environment. Like, how about making smartphones that last 5 to 7 years? Wouldn't that be the best thing you could possibly do for the environment? How about easier to recycle designs? Because right now, and I had the chance to see Apple's robot here in Austin that disassembles iPhones, but not everybody has the robot, and it's just not happening. So yeah, it was a joke. And listen, Apple's going to keep incrementing its way, making unsubstantiated claims until it impacts their business, and it's not doing that right now. So let's jump to the next topic here. I think we've exhausted the Apple launch. IBM announced a major split of their business last week.
Yeah, absolutely, Pat. We saw Arvind Krishna on every major network last week in the morning, and it was big news. It was breaking news. IBM is a company that has struggled to show continuous growth quarter over quarter, especially on the top line, and that has definitely kept the investors to some extent at bay. But that doesn't mean it's not an interesting company. It's actually a very interesting company that's doing some very important work in the cloud, in quantum, in systems, even in mainframe. I know, listen, but has had parts of its business, large $20 billion parts of its business that are absolutely in a zero growth opportunity right now. And that's what this split has essentially done. The company's going to split off by the end of next year is the ambition, create two companies, a new co that's going to be its managed infrastructure services unit. This is going to be a managed business. It's part of GTS. It's a nearly $20 billion annual revenue, but it's a part of the company that's had literally no growth. And in fact, it's had some declines over the past several quarters. IBM wants to reposition itself, Pat, as a cloud company. It wants to reposition itself. It made a $34 billion bet on Red Hat. It's IBM Cloud. It's about an open shift, containers, hybrid, and then of course using its world-class mainframe and Linux One technologies to provide secure layers for specialty applications like financial services, where the company has really shined. But what do you think the street wants? What do you think the journalists want? What do you think customers want? They want to see a company that's growing, that's exploding, double-digit, triple-digit growth, especially when you are the cloud business as a whole is quite a bit smaller than, say, an AWS or an Azure. And so I believe the company needs to be looking at a double-digit growth trajectory. And for IBM to hit double-digit growth, it cannot continue to hold on to lagging revenue sources that aren't driving big profits or big growth. So now with this spin-off, the company can really turn its focus to identifying itself as this more future-facing, innovative firm that is changing the world through cloud. And that's what it's going to try to do. And so, as far as I see it, it's a very strategic move. It's a great way for the company to provide more value to its shareholders while concurrently being able to narrow its focus to growing the cloud business. Because even the growth it's seen in cloud, which has been respectable, 20%, 10% with Red Hat, with its public cloud, with hybrid offerings, it's got its cloud packs, and then of course, you see the cyclical waves of Z and mainframe and systems. But at the same time, Pat, I don't think anything less than 10% overall growth is going to start to really get those headlines that IBM is on this new trajectory, on a new plane. And that's what I think the company sees as the opportunity here. And also, I'll just make one last note, and I want to turn over to you, trying to go faster, Pat, because I know we got a lot of topics. But the company's made a lot of moves in AI. It's making a lot of moves in quantum. Do not mistake, those are not in isolation of cloud. This hybrid cloud company concept is not saying we're just a cloud company focused all on cloud and cloud infrastructure. We're talking about SaaS layer, PaaS layer, IaaS layer. We're talking about applications that can be deployed in cloud. So AI is a big part of that. We're talking about simulation and the opportunity to deploy its Watson and its IBM quantum technologies. This is all part of the full story. And it even, like I said earlier, goes all the way back to the mainframe, which is part of the cloud story because of hyperprotect services and different layers that the company has added that connects your public cloud, your private clouds, and your hybrid and on-prem services. So strong move, Pat. I think the company needed to do something like this to spark a fire for growth. People want to see growth. People want headlines like $40 billion acquisition of ARM. They want triple-digit growth, double-digit growth, high double-digit growth like you see from AWS, Microsoft, and Google in the cloud. This is going to be the move that's going to see if IBM can hit those trajectories.
You hit a lot of the high points here. What I want to talk about, I learned before I started the firm 10 years ago, I had what I called a real job in Fortune 500 tech. And I learned a lot of lessons, and two that I learned. One was gear ratio. You have to have gears, interlocking gears inside of your company that are very similar shape, size, and speed. Otherwise, they grind on each other. The business that IBM is getting out of was a slower gear for sure, and they really needed to be focused on things like automation. Where, I'll call this the new IBM. It needs to be a much faster gear and cranking out product level innovations left and right. So I like it from a gear ratio perspective. And the second one was sometimes to get something, Daniel, you have to give up something. And if IBM wants to be looked at as a cloud leader, they need to give up something. And in this case, the managed services IT infrastructure group. And I think you did a great job covering it. Both you and I had the chance to chat with their president, Jim Whitehurst, to get a really good download on that. Let's move to the next topic. And that is that there is a rumor that AMD is going to acquire Xilinx for an eye-popping $30 billion. Daniel, you talked about big swings, $40 billion NVIDIA ARM. Well, here is AMD. So AMD is currently valued at over $100 billion. And investors are looking to its organic growth to be able to drive that. And AMD right now is on very solid footing in the PC market and in the data center CPU market. What Xilinx would potentially bring to it is, I believe, it would increase their probability of success in data center by nothing more than having a new type of compute unit, right? Heterogeneous computing is the rage. CPUs, GPUs, FPGAs, DSPs, and ASICs. AMD has a CPU and a GPU and a few ASICs, and it also this would get them into the FPGA portion. The one thing that I think people are missing here is that Xilinx also has these very high performance SoCs. These are new lines that, it takes years and years and years for them to stick big. But these are things like Versal and the Zinc lineup that have an ARM CPU, an ASIC, and an FPGA and a software stack on top of that. And interestingly enough, that excites me more than what I would call, the plain old FPGA. As we know from talking to Jim Anderson over at Lattice, these businesses can be very sticky and long term. So we'll see what happens. Nobody is. We haven't heard a peep out of either company since they discussed it, but I think it looks good. It would be an incremental strategic add if this were to go through. I looked at the valuation and I was thinking, ARM at 40 and Xilinx at 30. I think Xilinx is a lower risk path. Because a lot of their valuation is based on the revenue that they have and margin structure they have today, as opposed to the 40 billion ARM that I think is based, pricing is based a little bit more on what NVIDIA could do with the company if they had it.
Yeah, that's, I took a little bit of the opposite stance, but, I always do. I think AMD's done a lot of things really well. Lisa Su is the wild card. I mean, other than a few very small sort of, I would say somewhat unspoken of acquisitions that the company has made, she has not really been at the helm for a massive acquisition. So the last one was what, Pat, ATI, and it was the, Radeon, and it was sort of a disaster, but this was a different era for AMD. So it's not really fair to completely rate the potential of the Xilinx acquisition on what the company did over a decade ago with previous acquisitions. I don't like the valuation. When you talked about risk, I actually think there's a lot less risk with ARM, but it's different. I think there's a lot of regulatory risk with ARM. I think there's a lot of opportunity that we may see this thing get delayed, and it may not happen as quickly as people think. You have to basically get a lot of NVIDIA's competitors to feel comfortable doing business with NVIDIA. No doubt there's that kind of risk. I think if the deal goes through, though, ARM has got some tremendous intellectual property that puts it in billions of devices, and the royalty licensing revenue on top of the potential to influence future architectures will be massive, and it scales. It's GPUs, it's CPUs, it's at the edge, it's in the cloud, it's AI, it's everything, and it fits in really well. Xilinx, like you said, I think it's more incremental. It adds a capability in the data center that AMD can capitalize on. AMD does not have the FPGA capabilities today. Xilinx does. It's a $3 billion a year, but it's also a business that's been slightly in decline. It's not growing. And it's a business that really does benefit from having the ability to generate the ASIC, except for a few applications that are very specific to what Xilinx does. You're seeing more and more companies turning to the ASIC. You're seeing the Alibabas and the Amazons building the ASIC that gives them custom workloads for certain things, recommender engines, or for accelerating conversational AI. You might use an FPGA to develop it, but ultimately you're going to build it and deploy it at scale on an ASIC. And so Intel has that all in-house. And so if this is a move to go after Intel, I think it gets the company part of the way there. Having said that, AMD, I'm more confident than I've ever been before that the company will do well with the acquisition. So I'm not saying it's a fail. I'm just not that excited about it. I think it's adding revenue. I would criticize Salesforce if it did the same thing through incrementalism. It's an incremental acquisition. I'm worried about the price. I haven't sat down and calculated what's right, but $40 billion for ARM versus $30 billion for Xilinx seems like one has a lot more upside and the other is a much more finite acquisition that maybe wouldn't be made if the stock price for AMD hadn't soared so much over the last couple of years.
Well, I remember a couple of years ago, we were talking about Xilinx acquiring AMD, which, which just shows how nutty this market is. And I think that AMD, if they did go through with this, would need to explain the FPG to ASIC. I think the ACAP and SoC buffers them a little bit on that, though. So, Daniel, great analysis. Let's jump into our next topic, and that is the announcement of the Oracle Exadata X8M cloud service. You had a nice write-up on your website, and before we dive into this, Oracle is really had an incredible run, and I really had nothing good to say about Oracle the previous 9 years related to the cloud. And if you remember, Larry really kind of talked bad about the cloud and the notion of the cloud. Gen 1 cloud wasn't that it wasn't competitive, and it wasn't interesting, and most of their applications were on-prem and not SaaS. So I kind of saw a legacy company in decline. And now we've got the Gen 2 cloud with a ton of customers like Zoom and 8x8 and TikTok, and then we have all the SaaS success, the most successful cloud ERP company out there. I am slowly but surely becoming more of a believer in this company.
Yeah, that's a great point, Pat. I think as we've had the chance to be briefed, talk to their senior executives from their apps teams, cloud teams, now database, Exadata teams, we've gotten to start to see under the hood a little bit more. And that's been a really positive, improvement in terms of our ability to access and see where the company's going. Exadata, when you're talking about combining many databases together to, enable the simple accessibility, and now it's not actually simple, but for businesses to utilize all the data from all the sources, Exadata has been a very popular route. but it's had some limitations. And this new X8M iteration, it's kind of a next generation, provides some key new technologies and capabilities. It was both innovation and incrementalism at what I think at its best. So, one thing I thought was great was the incorporation of Intel. So this, obviously it runs on x86, Cascade Lake, but they've incorporated Intel's Optane persistent memory, which, for those unfamiliar, essentially allows lower latency and faster transaction processing, because the memory is instantly accessible without having to, it can bypass the OS, bypass the IO and the network to be able to access data in memory. So that was a big thing, Pat, and that also enabled them to, feature remote direct memory access, which is known as RDMA. And so you could combine those two things to really drive higher throughput, lower latency, faster transaction speed. The company actually touted 50 times faster than an all-flash. That's big. That's a lot faster. When you're talking about petabyte scale, that's really important, 50 times faster. That's the second thing, Pat, petabyte, scale. So their previous generation was, not quite there. Now we're talking 25 petabytes. So essentially at this level of scale, the company can deliver on almost any application to any company on the planet. 25 petabytes it supports, but they didn't only up the storage, up the whole compute. And that's really where the cloud service becomes important. The numbers, Pat, 4,600 CPU cores, 44 terabytes of DRAM, 96 terabytes of persistent memory, 1.6 petabytes on flash, and then the 25 petabytes of database capacity. That's huge. That's almost every application on the planet can now be supported by Oracle. The company has, by the way, as much as we like to pick on them, almost every company on the planet. I'm going to go fast because I know we're falling behind a little bit here. The other thing I thought was really cool was elasticity. It's more elastic. They used to kind of have their executive EVP of Exadata that briefed us on this, kind of talked about the company used to be sort of t-shirt size, small, medium, large, quarter rack, half rack, full rack. Essentially now, as long as you start at that base level of 4 CPU cores, you can scale very granularly, single core, additions, additional network, additional storage, but it's not the autonomous level. You do it by hand, but you can customize it, turn it on, turn it off instantly. Very important, Pat. And also down to the second pay per service. So it used to be, pay per hour. So the consumption economics on this thing have gotten really good. You use exactly what you want and you pay only for exactly what you use. This is a new Oracle. This is not the Oracle that's going to audit me. This is they might, but by the way, that's not just Oracle. It's an Oracle that has built a system that really does give its IT, its users, its database users, a lot of flexibility and a lot of capacity and scalability. So I know I kind of hogged the whole thing, Pat, but that's what it was. So it's a nice incremental and some serious innovation in there as well.
Yeah, I just want to add that I am super impressed with RDMA and Rocky, and Moor Insights and Strategy analysts are a little geeky. And yes, we have written white papers on Rocky, and I think that matters. And essentially what that means is instant answers from applications that sit on top of your database. And I will leave it here, but I am impressed. That's super, super unique.
Good call on Rocky. I missed that here, but yes, that was another important capability. All right.
Yeah, so let's dive into the next topic here. And essentially, Twilio, leader in what I consider marketing cloud, acquiring a big CDP leader segment for $3.2 billion. Hey, it's not 30 or 40 billion, but these are much different types of companies. Stuff.
Yeah, I mean, you're talking about a company that was in its, maybe VC round of VC. I don't know in front of me, but had some serious backing, and there'd been a lot of talk about segment, but this company is doing things, from a standpoint of delivering fully cloud-enabled customer 360 on data lakes. I've been really impressed by Segment. I watched the CEO come on CNBC, did a great job telling the story along with the Twilio CEO. Twilio may be the company that from all the messages you get with those on-demand instant offers and phone calls, and the company makes a ton of money. It's a sort of a cult following in its stock. The thing just keeps rocketing up, it feels like. But the CDP, Pat, I've talked about my trend predictions for digital transformation in 2021, and I said the CDP would be hot. next year. This was like Christmas came early for me, because seeing a multi-billion-dollar acquisition of a relatively unknown software platform at this point, because Twilio realizes in order to A, meet the compliance demands, B, meet the data scale demands, it needs to have the right tool that can bring all the sources of data together and work with all the third-party systems, meet all the privacy, the compliance, the granularity, the schema, all the things that are necessary to truly do a 360 customer journey and management with the data is going to be huge. And it's going to be an enabler to Twilio. And it's also, what I really like about it is, you've added 10 million Twilio developers to Segment's ecosystem. You've taken a 5,000 customer reach for Segment and taken it to 200,000 Twilio customers. And you're going to use all the combined integrations. And in between Twilio and Segment, this becomes a much bigger, much more targeted offering that can get beyond text messages and phone calls and really start putting all the right offers in all the right places. So I'm bullish would be the word. I think it's a bullish move. It's a big dollar move. I feel good about where it's going. And I also feel that this bodes well for, we just talked about Oracle CX, big CDP player, Microsoft Customer Insights 360, Adobe, even Salesforce. No, I'm just kidding. You know me, I can't miss a chance. But there's also some players that are coming up too. There's a company, Action IQ, and ARM, by the way, just actually is invested in a company called Treasure Data. Yeah, you're familiar with them. And ARM and SoftBank backed, and another very impressive company. Which, by the way, now that there's a separation with ARM, could be another big dollar acquisition target, because that company also has its stuff together. So solid move.
Yeah, I like what Segment can do for Twilio. It opens up just a tremendous amount of service lines and ways that their customers can get closer to their customers, and I like it a lot. From an industry point of view, it looks like CDP as a segment, not trying to be funny there, they're all being acquired and integrated. And I question whether there can be, how valuable a standalone CDP actually is, but we can do that for another show. Let's jump right into our final here, and that is Amazon Prime Day. This is hot off the presses. Essentially, they blew the doors off. And what I wanted to focus on, Daniel, was specifically small business. Amazon's getting a lot of heat for the way it treats small businesses, and it drove $3.5 billion to small businesses during Prime Day, which is absolutely incredible, and I think flies in the face of many of the recent recent communications that even the House Subcommittee on Antitrust had on them. And I don't know, I have my views on why they're picking on Amazon, but gosh, Amazon has made $18 billion investments into SMBs. They've given away $1 billion in AWS credits. They helped for Prime Day and holiday, increased advertising, gave away $100 million in advertising. Launched 135 free tools this year. Even Kindle has driven almost $1.5 billion of revenue to independent publishers. And just for grins, in my analysis, my pulse brief that I just published, I challenged Walmart and Target and Costco to do the same thing. But congrats to Amazon for Prime Day, and congrats to those small businesses that drove $3.5 billion.
Yeah, Pat, sometimes I think people confuse, because we have the access to the executives at companies like Amazon, we have the chance to hear the stories, get under the hood and see behind the scenes, that creates this, an unreasonable bias. But the difference is I actually recommend do your homework. Spend your time, do your research, pay attention to what Amazon is doing. Look, big companies are always going to do things that are going to be challenged. And there's always going to be a certain class of society that's going to be very negative about very successful businesses, companies, and people. However, Amazon has grown through a lot of very wise, very intentional moves that have diversified it and made it a bigger and better contributor to society. Pat, we've talked endlessly about job creation. We've talked about its contributions with SMBs. You know, I mentioned earlier a legitimate climate pledge. And when Amazon launched its new devices, it actually talked about, you know, a 1-to-1 give back from a carbon neutrality on every Echo device it sold, cable included. So this, you know, this report and this metric that Prime Day generated billions of dollars for small businesses, not to mention saved consumers a lot of money on that day, buying things maybe they didn't need, but often that they did. A lot of people I know that shop on Prime Day wait for Prime Day to buy things that they need. And so this had economic value. Amazon, you know, and I wrote a piece on Market Watch recently talking about Amazon needing to be looked at and judged upon differently than other companies because they're not a monopoly. There's not a retail monopoly. There's not a technology monopoly. Sure, the company's really big. And when you get really big, you'll hear Bill Gates say it. You'll hear Jeff Bezos say it. You will warrant attention because people want to know why you're so big and how you're so big and if you're doing anti-competitive things. Sure, you want to be part of the Amazon ecosystem. You're going to pay for that, but there's value there. There's value there. It's generating billions of dollars for small businesses, Pat. So I think it's positive. I think these proof points are there. I just hope people do their own homework. I feel like too many people read headlines. Too many people listen to the wrong pundits, or at least don't listen to pundits that have two sides to the story. We've spent an enormous amount of time researching this, and it's our job to provide as unbiased a view as possible on the company. And there's a lot of big companies, a lot of big retailers, and if you look at who's adding the most economic value back, I continuously find my way back to Amazon as a company. So very positive news, another great Prime Day success.
Gosh, Daniel, you always just take this stuff to the next level, which I really appreciate. And Daniel, you know, I just hope that we continue to have people who innovate and take huge risks are rewarded. And I think we've seen through history that when there's a construct that doesn't reward people for taking these monumental risks, society suffers. So with those words of wisdom, I'd like to bring this latest chapter of the 6-5 podcast to an end. Daniel, thank you so much. If you liked what you heard, press that subscribe button. If you dislike what you've heard, send all complaints to Daniel on his Twitter feed. I'm sure he would appreciate that.
My Twitter feed is at Patrick Moorhead.
Thank you. And mine is at Daniel Newman UV. So with that, we're going to bring this chapter to a close. Thanks for hanging in there with us and have a great weekend.
Bye, everyone.